Hi folks, hope everyone's good. We're going to take a quick look at NEO today. Now, just a big picture for NEO. Let's just have a quick look. This is the daily chart. And if we zoom out, just to highlight this is the area which we're focusing on, we can see that this, where we are at the moment, is essentially long-term support if we ignore the October crypto crash. So we're in a very good area for a potential long play if the market plays ball. But let's just switch back to the 6-hour chart and zoom back in and see what the trading opportunity is. So we've obviously in the October crash, we moved back into this lower range, and this green zone here represents essentially long-term support. So this is as low as NEO has gone, if you excuse the October crash. And now we've had this very strong downtrend after a brief recovery, slight recovery after the October crash, and we have broke out of that pattern. Very straightforward, and now we are forming a potential double bottom, and if we include this here, it could all be potentially a triple bottom, but because we've broken out, I'm going to just consider this very straightforward, a double bottom, and this is the defined neckline which is being respected at the moment. So the trading opportunity is very straightforward with these double bottom plays. We are looking for a neckline break and simply to trade the range. And the advantage of trading support plays is we have pretty good options in terms of risk management, in terms of where to put our stop losses and so forth. And our TP is pretty obvious at the top of this range, and we were last there at the beginning of November. Now, of course, NEO could roll over if the market and Bitcoin redevelops a stronger bearish trend, but right now a lot of assets are breaking out, and if you look at Ethereum versus Bitcoin, you can see that the altcoin market is potentially going to have a bit of levity. But of course, today we have the FOMC meeting in the United States, which is complicating the picture slightly, so you may want to wait till after you've had some of those data points come out to see if there's interest rate cuts in the United States, regardless of where you're trading around the world. But nonetheless, this is NEO, and this double bottom has a neckline, and the idea would be, of course, very straightforward, very textbook, is we're just waiting for a break of the neckline and then looking to come in, depending on how bullish the market is, either on the neckline, or if you feel that Bitcoin isn't quite in the right position to accommodate a long, you may then decide that, okay, so once we've had a confirmed break of the double bottom neckline like this, I'm going to look to come in a little bit lower like that and come in at this area. So there's a couple of different plays, but obviously the textbook play is to wait for a breakout of the neckline and just come in for the SR flip, the move from resistance to support, and then ideally ride it up from there, taking profits at the top of the range. The alternative play, though, of course, is you could come in at support and accumulate if the market is a bit hesitant. So we could see some price action like this as well if the market is a bit hesitant today and we get some whipsaw because of the FOMC statement later today. So you want to be coming in hard at around 3.94 ideally, and accumulate in this range, maybe a little bit higher, maybe closer to $4, depending on how bullish you think the market is. This is a slight higher high as an example. This is a slight higher low compared to that one, but clear neckline break you should be waiting for. But if you are one of these people who likes to accumulate at support, then of course you have a very clear, obvious area at around 3.93 or so to come in for one of these support buys, which of course is very manageable in terms of risk. So it would look something like that potentially, and that would be your alternative hard support play. So depending on your strategy would depend on how you approach this, but that is NEO 6 hour.